Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, March the 24th, and just wanted to take a couple of minutes and talk about what a wonderful week we had in the market last week. Talk about what really was the driving force behind that. Talk about where we see markets moving forward this week and what is going on in the market internals and what they're telling us. And so last week was a phenomenal week in the markets. The S&P 500 was the leader, up 5.4% for the week. The mid-cap index, as measured by the S&P 400, was up 4.7%, and the small caps, as measured by the S&P 600, were up 3.8%. So a very strong rebound week in the market, and what that tells you is it's the best week that we've seen in 6 months that we've seen in the market. And it's the importance of why we always preach at River Place and why I get on here and say, hey, make sure, you don't ever want to try to time the market, pull out, because you'll miss the upside of weeks like we saw last week. So stay invested at all times. It helps you catch these rebound rallies, and understand if you don't have to touch it, please don't touch it. Or if you need to make some changes or things like that, make changes while the market is down, but stay invested so you can capture those returns to the upside. So what we enter into this week, and we had markets kind of muted on Monday, and believe it or not, we had Chairman Jay Powell give a speech at an economic conference this week, and he basically said that 50 basis points rate hikes were not off the table if the Fed needed to control inflation. And so, believe it or not, the market rallied off of that on Tuesday. And as the markets digested that and we moved into Wednesday, we saw some selling yesterday off of those headlines and that news of, is the Fed going to overdo it? Is the Fed going to raise too much to put us into a recession? But the underlying economic conditions in this country are phenomenal. There are still 10 million job openings. The initial jobless claims came in less than expected this week, which is another encouraging sign as more and more Americans are getting back to work from the pandemic. So we do have strong underlying economic conditions, and this may be a year where we do see the economy outproduce the stock market, meaning the economy is still strong and still humming and doing well, but we have seen 100% returns from the March 23rd, 2020 bottoms. So we are exactly 2 years in a day from the bottoms of the stock market of March 2020, and we've seen 100% return in this very, very short time period from those lows. So don't be surprised if you see the market take a pause this year. Doesn't mean that it's not a bad time to get into the market if you're not in the market. And what we're seeing internally from what the money flows are telling us is that money is starting to flow back into the stock market, especially on the days where you see selling pressure going on. You're really seeing money enter into the market. So you'll see on CNBC and the other talking heads, other business channels, when the market is going down, you will see them bring out a lot of the negative people that are talking about how the market's going to fall apart and things like that. But what you have to do as an investor and somebody looking long term is you're going to have to kind of mute the noise, whether it's on the positive side or the negative side. But you kind of have to mute the noise and really look at what the market internals are telling you. And studying money flows is a great way of seeing where the buying or selling pressure is in the market. If there's more sellers than buyers, then money flows are negative. If there's more buying pressure than there is selling pressure, then money flows are positive. And what we are seeing is we are seeing the money flows start to head in that positive direction and waver in between positive and negative. So it's very, very encouraging that it looks like we have some great upward trajectory from here. So to give things into perspective, the NASDAQ at current levels is 13% off of its all-time high. And if you're looking for an entry point to get into the stock market, or you've been waiting for things to get in, well, what an opportunity. Something's down and on sale 13%. We know that markets will eventually rebound. I'm not calling for them to happen in the next month or so, but markets will rebound and you can garner that return. So as always, if you have questions about what's going on in your individual portfolios or ways in which we can help you, feel free to reach out to us. We're easy to talk to. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much.